Now, one look at last month's 11% decline in new home sales, and many traders and investors, they concluded that the recovery in housing will come in fits and starts. But Chuck Lieberman of Advisors Capital Management, he's skeptical of that kind of thinking. He sees a lot of pent-up demand for new housing. Chuck, good to have you with us. Thanks for coming in. You see a lot of demand out there?
Well, I see a lot of latent demand. There are a lot of people who, for example, young people who've moved back in with mom and dad because they can't find a job. You can be sure as soon as they find the job, one of the first things they're going to do is move out. That's latent demand. There are a lot of other ways that people have forestalled making that kind of an investment or a rental decision in some cases. If you look at the underlying population trends, we're forming, at least on a trend basis, about 1.5 million households per year in the U.S. So when
this is just new formation.
Correct. And so when you build 2.2 million units, as we did a couple of years ago, you're literally inundating the market with new housing. And obviously, sooner or later, you have a crash in housing. But today, we're building housing at the rate of 600,000 units, dramatically below those population trends. So ultimately, there'll be a surge in demand.
All right. So if we get this surge in demand, will that, in effect, sort of negate some of the negative economic news that we've received recently? I mean, should we not take everything at face value and say there's an underlying trend?
Well, we want to see an underlying improvement in the housing data. And pretty much, except for today's report, we've tended to see that. You see it in, for example, the inventory numbers declining both for new and existing homes. You see it in existing home sales. You see it in the housing starts data. Yes, we had a sizable dip in new home sales, but I suspect that will not be a recurring event, and I suspect it's more due to the timing of government programs.
Talk about one stock that you're using in order to, in a sense, to take advantage of what you see in this trend, and this is Trex, because you're also, not only are you in the common stock, but talk about the convertible, because that's an interesting area. You like the convertible bond for Trex.
Right. We're one of the biggest holders of the convertible. It's a small issue. It's not terribly liquid, but we managed to buy a pretty large chunk of it. 6% coupon. We bought it when the stock was really depressed, so it was what's called a busted convert. We were able to buy it in the 60s and the 70s. The bond
60, 70 cents on the dollar.
Right. And today it trades for over 110 on the dollar because the stock is now almost 20 bucks a share, and the conversion price is 21.72. So we really like this. We've got a couple more years in which we can hold the bond, collect that nice coupon, and ultimately, as the stock continues to rally, which we expect it to, because when the housing market gets back to normal, Trex could be making $3, $4 a share. Stock will be worth in the ballpark of 40. The bond could be worth 200.
You like using these convertible bonds, don't you? I mean, because you've been very bearish on the bond market recently and saying that people ought to really be very wary of going long bonds. But you like convertible bonds. Why?
Because they are a way to play the stock market and yet own a bond. It's cheating, and it's legal cheating. One of the neat things about it is that if things don't work out, the economy were to remain soft, Trex stock were to remain weak, we'll get repaid. The bond will mature. We'll get paid off at par. We'll earn a very good yield to maturity. That's the worst case scenario, and that's so bad.
So you got to make sure that you buy these kinds of convertibles at a price that makes sense.
Absolutely. And in fact, you have to look at multiple variables. Not only do you have to buy the bond at a price that makes sense, but you also have to look at where the stock is relative to the conversion price, and it has to be in a company that you think has good prospects. So a lot of things have got to fall into place to make the trade work. But there are a lot of those kind of opportunities out there.